we've been fortunate to be in a lot of those right pockets of the market. But the other thing I would say, it's a deliberate, a strategic, it's a tactical process where we've looked to position it where the leadership is, what's working, what's winning in the markets, and that's really helped benefit performance. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It's Friday. We're in the middle of a snowstorm. We had a snow day yesterday. Markets have been off to a hot start in 2026. Our portfolio has been off to a hot start as well. Greg's escaping next week on vacation. I think he's scared of a little snow. But what's going on? How you doing, Greg?
Vacation was planned long before the snowstorm. I just want to set the record straight. Here at Aretec, we're not afraid of the snow. That's actually what we're built for adverse, unfavorable conditions. So this is where we thrive. So the trip was planned long before this.
Where are you going? Where's the sunny destination?
Yeah, so we're going to Dominican. So it's like, my family, like my sister, like parents. So it's kind of like a little bit of like a family trip. Cousins will be able to hang out and all that stuff. So it should be fun.
That's awesome. You're going to Dominican. I'm gonna be shuttling around to about five hockey games. Tournament this weekend.
Hey,
enjoy yourself.
Yeah. That's fun. Is it local, the tournament, at least?
It is this one. We have one in a few weeks. That's Niagara Falls, which I think is the furthest. But this one's just kind of around the around the city, so it's not too bad. But should be a busy weekend for us.
Just dipping your toes into the tournament circuit before they start, traveling and hotels and overnight.
Yeah, we're not going to Europe. We're not going to Europe quite yet, but maybe that's that's coming up soon.
Yeah, that's awesome. Well, no, it should be fun. Busy weekend though, but fun.
Oh yeah. Look, good start to the year in the markets. I mean, we did our outlook video last week. We want to give a little bit of an update on portfolio positioning, what's going on in the markets, and then also what's kind of leading to this hot start and what's driving things in the first half of January here, because it is a lot of the continuation of what we saw in 2025, which is good, because really that's where we're positioned and that's what we've continued to participate in. So, it's been a little bit crazy because the news flow that you've seen just coming down the wire, all the stuff between Trump and Venezuela. I mean, I could barely keep track of all the geopolitical stuff. Markets seem to just be really shrugging it off, not too concerned about it. There's other drivers that are chipping in as well, and our portfolio has been in a good position to really hedge against that and participate and actually benefit from some of the chaos. So we want to dive into that a little bit, talk about some shifts in positioning in the strategy, and looking forward to it here.
Yeah, so it's interesting. When we did our outlook a couple weeks ago now, and we had kind of mentioned that our shorter term indicators were looking like pretty positive for the most part. Maybe the longer ones a little weaker, but shorter term a little bit of positive. And we're seeing that so far this year. Like, markets have been pretty favorable, but our portfolio in particular has been quite strong, and a lot of that has to do with how we're positioned. But to your point, well, we've also been deploying and making some moves within the last week or so.
Yeah, the last month or two, we had been a little bit more on the conservative side of the asset allocation. We got, with that short-term strength, we got some confirmation in our signals. So we were actually deploying some more capital, probably about 10 to 15% increase the equity exposures. Nothing major, nothing dramatic. I think our growth portfolios are sitting somewhere around 75 to 80%. So sort of at or even a little bit below target. So I wouldn't call this like a screaming green light here, because the other thing to consider, even though we have some shorter term and medium term strength out of the markets, they are a little bit on the overbought side. Certainly not completely overbought, completely overextended, but after the year we saw 2020 5, the start to this year, it's not like we're seeing a sell-off or a washout, so we did some buying. Some of that was just layering in broad-based exposure, whether it's in the, US market, some broad-based Canadian exposure, some broad-based dividend exposure, and then a decent amount of it was looking towards some favored sectors and some sectors with great relative strength and trends behind it. And we've seen that really through 2025 when we make those sector and subsector positionings. It tends to be pretty good odds, especially with the market that we've had. That trend will continue and continue to compound. So we've added to some areas like base metals, which we didn't have a lot of exposure. So that's like your copper and zinc. We've got a lot of gold and precious metals in areas like that. So I've added to more of these base metals, more practical type metal, added to financials, Canadian financials. We've added to infrastructure, more global infrastructure in our dividend sleeve. And then we also added to Japan, which has been a pretty hot area, the market overall. And part of our relative strength and tactical strategy. We want to go with what's working, what's actually winning, what's actually leading the market, not trying to chase the parts that have been really beat up and washed out and look awful. We want to go where other investors have already been going, not necessarily right at the top of that market, but just trying to continue on with trends because all things being equal, and we saw that in 2025, what's been working tends to continue to work and compound and layer in return. So it wasn't really other than a little bit of broad-based exposure in the US market, wasn't really like layering into tech or the AI trade. That's where you've seen maybe a little bit of steam in some cases come off. In the last couple of months, it was into some broader, more diversified areas and really just to ratchet the equity exposure up a little bit overall.
Yeah, and that's one thing I was gonna mention. It's not like we were deploying capital into the very overly priced areas of the market. It was in a lot of value with financials and base metals, maybe areas that, haven't shot up as much as maybe the tech or the more growthier stuff in the last little bit.
Yeah, and part of that, if you look at one of the things we wanted to unpack when we see the numbers this year, I mean, I think our portfolios are up, I mean, anywhere 3, 4, probably more like 4, 5%, and it depends on the exact portfolio and the mix in, couple weeks, those are pretty good numbers. What we have seen primarily is a continuation of trends, from last year and some of our best performing positions, which we wanted to unpack what's been driving things this year and what's been driving things over the last year. It's a lot of overlap. It's not that there's necessarily new names coming in. So it just speaks to these trends, this relative strength. What's working tends to have a um, tends to continue to work and tends to continue to drive. So we want to talk about what some of these drivers are and what some of the top performing positions of 2026 have been.
Yeah, no, absolutely. And when you look at it, and we'll dive into the list, we have like a couple individual stocks, but kind of more and where the portfolio has kind of continued to move towards is just these, ETFs, these thematic and sector specific ETFs that have continued to show a lot of strength. So maybe kind of give us where the money's been going this year.
Yeah, so I mean, like top position. I mean, certainly gold and gold miners have continued to go. I mean, that's been one of the consistent themes that we've talked about. So I'm just looking at some numbers here. Games like Agnico Eagle, that one is up 19.66% year to date. Since inception, just at Aretec, that one's 100%. So the gold market stayed hot. Positions like XGD and Ring, which are global gold mining positions, 15%, give or take this year, and some like 90 to 100% since we bought them, sort of April of 2025. So those are crazy numbers. Just think of the uncertainty that's out there, all the unknowns. What's been happening this year is that every time you hear some crazy news about Trump or the geopolitical situation, gold just continues to surge. And so the bullion has been pretty good, but names like GLD and CGL, they haven't been crazy, double digit type numbers like we're seeing out of some of the other areas of the portfolio year to date. But once we go back to since inception on those are around 60% that the actual gold bullion has gone up. So that's been a big one. The precious metals, the mining space, which we've got good, healthy exposure. And then through some of the positions like base metals, we've even added to it, but just getting some more diversity in that space and not just going towards more and more precious metals.
Yeah, and another area that's done exceptionally well to start the year, which we've had a lot of exposure to, we actually added a little bit to it, this past week, Will, has been, kind of to your point, given everything going on out there, has been aerospace and defense. Like, that's been one of the best sectors this year.
Oh yeah, I mean XAR is more of an equal weight one that we've had for probably a couple years now or a year and a half. But think of just again all the chaos, all the unknowns that are out there, aerospace and defense, cybersecurity, those types of areas. So Shield XAR, which is S&P Aerospace Defense, Global Defense. We also added to XAD, which is defense and security. So much of this is policy driven. There's a huge secular tailwind, and these defense stocks they're behaving much more like defensive types of growth stocks. So you hear kind of bad news, and that's an area of the portfolio that's popping. I mean, XAR and Shield are up 21, 22% on the year, and about 50 to 60% um, since we initiated those positions over here at Aretec. So, precious metals, gold, and I know that's not necessarily a nice and friendly area of the market to be in. These sort of defense and military type stocks, but essentially what's working is what's been working this year, and so we've continued to see that in the last year and a half that's where you want to be. That's where we position portfolios. That's leading to strong results so far in 2026.
Yeah, and that's really the crux of our process is that we're watching what's going on, through our indicators, and we're positioning money to those areas that are actually working and kind of benefiting from everything going on and some of the chaos. So those have kind of been our top three, but we've also have some smaller positions this year that have also had a really really hot start.
Yeah, so I mean, what's been hot? I mean, oh yeah, even going back to the whole commodities
Yeah.
space, we have a couple smaller ETFs which we've talked about a little bit. So uranium has continued to be incredibly hot, plays on that whole AI theme, energy security, clean energy as well. We also have a small position in rare earths and strategic metals. So that's one that's topical. You'll hear it on the news again. A lot of the politics, geopolitics about securing rare earths and strategic metals, uranium. I mean, those are up just year to date 25 to 30%. Since inception numbers are decent on those, not as crazy, but they're certainly catching a bid to start the year. I think the other big area that we'll talk a little bit about is some of the tech names and the semis because we've seen those going. Maybe the whole tech complex hasn't been going, and part of the reason is 2026. The Mag 7 is losing a little bit of steam, but we don't have a ton of we're not overexposed into those Mag 7 stocks, and we've got a lot of diversity. Some of the broader based tech we've actually lightened up and just stayed with specific names, but tech's one of those areas again that continues to lead the charge in 2026 here.
Yeah, and there's, if you look at some of the bigger players, kind of to your point, Will, like Microsoft, Apple, those have just kind of been softer to start the year, which, is understandable. They had a pretty decent 2025, but semiconductors in particular, and we've had that for almost a year now, maybe 10 months or so. We were kind of buying that at the bottom of April. That had a really strong 2025, and that's continued to show a lot of strength in 2026. So
Yeah, so SOX, iShares Semiconductor ETF, that one's up about 13.5% just to start 2026. And then we bought that middle of April of up about 94%. And semis and all the deal making that's going on, China, et cetera. You're just hearing a lot of news. Taiwan Semiconductor coming on that. And these names are catching a bid. So that's certainly part of what's driving. And if you look longer term, our tech names, Google is right in the middle of the AI theme, not as strong this year since the last little while, last year or so. Google was up or Alphabet up 78%. So that's been a big winner. And then financials in general, but the one we've seen in our portfolio, BlackRock up 9.5% this year. Caterpillar is another one of these big ones that we look at sort of the whole industrial. I mean, it certainly plays on the mining theme and what's happening there, but Caterpillar is off to another hot start, up 14.5%, 51% since inception. So that one was a big winner. So it's a lot of more of the same, whether it's the aerospace and defense, whether it's gold, whether it's semis. That's what's helping driving things. So we've been fortunate to be in a lot of those right pockets of the market. But the other thing I would say, it's a deliberate, a strategic, it's a tactical process where we've looked to position it where the leadership is, what's working, what's winning in the markets, and that's really helped benefit performance. Obviously, the tailwind of rising markets has helped a lot. Like, been a very good market, but we've been fully participating in it. In that, we haven't missed out. The portfolio strategy is looking very good here to start 2026 for sure.
Yeah. Yeah, we're off to a good start, and the one thing that will just emphasize how the portfolio looks, today and what's working, that might be very different in 6 months, and that's with our process. We're gonna move and change it. So just because, we're in the first couple weeks of 2026, this is what's working, that equation could completely change, in a few months.
Yeah, and it's why we wanna be nimble, tactical, responsive to changing conditions, and then the other thing is that we're more on target invested, but doesn't change the fact that there's risks, there's uncertainties. It's just with our process, we're not gonna sit on cash forever. We're not gonna sit on the markets forever. Largely the reason that we're gonna listen to the signals and the indicators the markets are giving us, and when the markets are showing strength, we wanna be participating in it. When they're showing signs of risk and weakness, we wanna shift and change based on those conditions. So that will change over time. I have no doubt there's gonna be some kinda correction or sell-off or something that happens in that at some point here, right? We know that's gonna happen. The market is not gonna, keep going up and up and up unchecked. It's just we don't know when that's gonna happen, and the market continues to kinda shake off or just doesn't seem to care about a lot of this negative news, the political, the geopolitical stuff between Venezuela, Iran, and Greenland is the other one. The market just saying kind of, well, it's continuing to go and investors continue to pile in. So the thing is, we're going to listen to the market. We're going to listen to, the heartbeat of what's going on in there and shift and change based on those changing conditions. We look at it now, sort of mid January 2026. It's been a certainly strong 2025, strong recovery after that whole, tariff situation in April, and we're seeing continued strength in the markets. So things are looking pretty good here to start the year.
Yeah, absolutely. And the one last thing I would say, Will, is also when you look at kind of like the economic data side of things, inflation, that seems to be relatively calm so far. We had a couple sub numbers come out this week. So the market is pretty positive with a lot of that news flow coming out.
Yeah, and, we'll keep shifting and changing based on what's going on out there, but, look, it's been good to see. As always, we want you to be wealthy, which has been good to see to start the year. We saw it in 2025, we're seeing it to start 2026. We want you to feel wealthy. Don't want you to be worried, too much about all the craziness that's going on out in the world. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about, and, we'll be back with everybody soon. So have a great weekend and try to stay warm. Greg, we know you'll be staying warm, but everyone else try to stay warm in this frigid temperatures and deep snow here.
Sounds good. Have a good one, everyone.
All right.